All right, let's talk about building wealth. For so many people, the whole idea of investing feels, well, complicated, intimidating even. But here's the thing we've found in our analysis. It really doesn't have to be.
When you think about investing, what's the first thing that pops into your head? Is it trying to find that one hot stock tip that's going to make you rich? Or maybe it's the stress of trying to time the market perfectly, buying low and selling high. It's this feeling that you have to be some kind of financial genius to even have a chance.
But what if I told you that whole mindset is wrong? What if there's a much simpler path, a proven strategy that can build serious long-term wealth without all the stress, without the constant trading, and without trying to find the next big thing?
Okay, so what is this big secret? Well, it's not really a secret at all. It's incredibly simple. Our research shows a powerful portfolio can be built with just 2 or 3 things called exchange-traded funds, or ETFs. That's it. That's all you need.
This right here is the biggest mental shift you have to make. Forget trying to find that one winning company, that needle in a haystack. The idea here is to just buy the entire haystack. With ETFs, you can own a tiny piece of hundreds or even thousands of companies all at once. Instant diversification.
So what exactly are these building blocks? Let's get into what each of these funds actually does, and more importantly, how they work together to create a really powerful yet simple portfolio.
First up, we have the foundation. This is the absolute core of your portfolio, the biggest piece of the puzzle. Its job is to give you a piece of the action from the entire stock market, the greatest engine for wealth creation in history. So we do this with what's called a total market ETF, something like VTI. And it does exactly what it sounds like. It holds a small piece of pretty much every single public company in the US. We're talking the biggest of the big, all the way down to the small up-and-coming companies. It's the ultimate set-it-and-forget-it way to own the whole market.
And what about performance? Well, look, past results are never a guarantee of the future, but our research shows the U.S. market has historically provided some pretty amazing returns. Over the long haul, we're talking about an average somewhere in that 9% range. With just this one fund, you're tapping into that reliable long-term growth engine.
Okay, next we want to add a stabilizer to the mix. This part of the portfolio isn't just about growth, it's about giving you a little something extra. A steady stream of income along your journey.
And this is where a dividend ETF comes into play. Think of something like SCHD. This fund focuses on big, established, high-quality companies that have a long history of sharing their profits with investors. It's kind of like getting a regular paycheck from your investments. And the best part, you can use that paycheck to buy even more shares.
To put a number on it, that means you're getting a cash yield of around 3.8%. That's real cash that shows up in your account, and it's an incredible way to get paid while you wait for growth, adding stability and seriously speeding up your compounding.
Now, for those of you who want to add a little more horsepower to your portfolio, there's an optional third piece. Let's call it the accelerator. This part is all about zeroing in on sectors that have a higher potential for growth.
So this would be a growth ETF, maybe one that focuses on a sector like technology. It gives you more concentrated exposure to those innovative companies that are really pushing the economy forward. Now, to be clear, this part of the portfolio is going to have more ups and downs, but historically, it's also provided a really powerful boost to your overall returns.
So let's see how this all fits together. A really simple, balanced way to do it could look like this. 60% in that foundational total market fund, 20% in your stabilizing dividend fund, and that final 20% in your growth accelerator. See? It's diversified, it's balanced, and it's incredibly easy to manage.
Okay, but what does this simple strategy actually do for your money over time? This is where the real magic happens. It's not about being complicated, it's about being consistent and letting the incredible power of compound growth do the heavy lifting for you.
Enough theory, right? Let's look at the actual potential here. What happens if you just consistently, month after month, put money into a simple portfolio like this one? Let's run the numbers. This is where it gets really exciting. Let's say we assume a 10% average annual return, which, as our research shows, is right in line with what a portfolio like this has done historically. If you invest just $500 a month, in 10 years, that could grow to almost $100,000. In 20 years, almost $400,000. And in 30 years, you're looking at over $1 million.
Just let that sink in for a second. Over $1 million. This isn't some crazy scheme or a lottery ticket. This is just the result of a simple, disciplined plan executed over time. It just goes to show you that becoming a millionaire isn't about having a massive income. It's about having a consistent strategy.
The math is just, wow. It's compelling, but it only works if you actually stick with the plan. So let's turn this entire strategy into your own personal, dead simple action plan.
Here it is, 4 simple steps. First, pick your 2 or 3 ETFs. Second, and this is absolutely crucial, automate your investments. Set it up so the money goes in every single month without you even thinking about it. Third, make sure all your dividends are set to automatically reinvest. And fourth, and this is probably the hardest part, just be patient. Stay the course and ignore all the noise.
And that really brings us to the single most important idea to hold on to. There will be good years, there will be bad years. The market is going to go up and down. That's just what it does. But you have to remember this. Over the long term, patient investors who stay the course have always been the ones who are rewarded.
And that's really it. That's the simple path. It's proof that building wealth doesn't have to be complicated. If you found this explainer helpful and you want more straightforward analyses like this one, be sure to subscribe. We'll see you in the next one.